Good evening, everyone. James from uSMART Securities. Thank you for attending this Talk Stock with James series. Tonight, we will be talking about Sea Limited. Is Sea Limited still the Tencent of Southeast Asia? And I will be conducting this Talk Stock with James series every alternate Thursday. The next one will be 11 May. I will probably talk about Netflix or Texas Roadhouse in the next webinar. Still deciding. And this webinar replay will also be uploaded on our YouTube channel as well, Talk Stock with James. And while you are listening back to the replay of the YouTube replay, please also subscribe to our YouTube channel as well. And let me begin with some disclaimer first. This presentation is for education and sharing purpose only and does not constitute to any form of advice. Past performance is not indicative of the future performance. Now, let's talk about Sea Limited. Sea Limited is a Singapore-based technology company that operates mainly in Southeast Asia. 67% of its revenue come from Southeast Asia, 16% from Latin America, mainly from Brazil, and 14% come from the rest of Asia, China and India. Sea Limited has one of the most successful growth story in Southeast Asia, and it has some of the most exciting tech element. The three main business segments are digital entertainment, e-commerce, and digital financial services, namely Garena, Shopee, and SeaMoney. It was formerly known as Garena, but it changed its name to Sea Limited when it went IPO in 2017. The name change itself is basically to reflect its expanded focus beyond just online gaming itself. And let's talk about Forrest Li first. Forrest Li is the founder and the CEO of Sea Limited. He came from a humble background. Forrest Li started Garena back in 2009 to help foreign game developers to distribute games within the Southeast Asia region. This was a revolutionary idea because back then, if online players wanted to play a foreign game, they would have to connect to the servers where the foreign publishers were based. For example, if you are interested to play Warcraft 3 10 years ago, you probably would have to connect to Battle.net, a server network based in US. But usually this will affect your gaming experience due to latency issue. So Garena addressed this latency issue by setting up local servers within the Southeast Asian region. Thereafter, Forrest Li foresaw an explosion in the e-commerce demand within Southeast Asia following the growth in mobile penetration. So prior to the launch of Shopee, existing e-commerce players such as Lazada and Gmarket largely operated in the web browser space, and their overseas strategies were mostly extension of their parent company's home country strategies with limited localization itself. However, instead of web browser, Forrest Li adopts mobile-first strategy. To put it simply for you, Forrest Li prioritized mobile version of the website over its desktop version. And he also understood the Southeast Asian market is not a single homogeneous market, but rather a collection of diverse countries, each with their own unique culture. So he had the foresight to adopt a deeply localized strategy to attract local sellers to the platform itself, which ultimately allowed Shopee to capture the market share quickly and became the market leader now. And if Forrest Li is the visionary behind the company, Chris Feng would be his strong execution right-hand man. Chris Feng is currently the group president of the company and was previously the CEO of both Shopee and SeaMoney. If we were to look deeper into Chris Feng's experience, we would realize that he is an individual who possesses extensive knowledge on scaling a marketplace business. Prior to his current position as the group's president of Sea Limited, Chris Feng served as the managing director of Rocket Internet. So during his tenure there, he led the marketing initiative across all the Rocket's portfolio companies, including Lazada, Foodpanda, and Zalora itself. It was likely during this time that Chris Feng acquired the skill necessary to build a strong and long-lasting brand for a marketplace business itself. And after his time at Rocket Internet, Chris Feng went on to work for Zalora and Lazada, where he led the procurement arm across global region. While at Lazada, Chris also managed all the Lazada purchasing for all categories across Southeast Asia. So it was clear that Chris understands the importance of a large assortment of goods and providing access to local products to succeed in the e-commerce space itself. And because of the excellent management that we see today, Shopee managed to beat Lazada in the Southeast Asia by adopting a deeply localized strategy that attract more local sellers onto their platform itself. So basically, they customize their approaches to each country, including accepting the local payment methods and providing the customer support in the local language. And Shopee also adopt and focus on the mobile-first strategies itself, which Lazada was slow to tap into. Yep, and so basically, strong management team is one of the reasons I like about Shopee. And next, let me show you the market capitalizations, the market cap of Sea Limited. Sea Limited had his IPO in 2017 at an IPO price at $15. It reached a market cap of $5 billion on his debut. And about 4 years later, in October 2021, market cap ballooned to $200 billion with a share price of $357 itself. So the media was calling Sea Limited as the largest company in Southeast Asia, larger than many other Southeast Asian companies here, such as Public Bank, DBS, Maybank, Bank Rakyat, Indonesia, Airport of Thailand itself. In October 2021, DBS market cap was about 60 billion. At his peak, Sea Limited market cap was 3 times the size of DBS. But currently, DBS market cap is still around 63 billion, but Sea Limited has dropped to only 44 billion. And Sea Limited was considered an investment darling back then because it benefited greatly from the COVID-19 pandemic. It has the e-commerce, e-gaming, and e-wallet services, making it one of the best growth stories and ecosystem that investors believe in. Moreover, with the China crackdown on technology stocks starting in late 2020, we could see here that Tencent share price kept decreasing itself. Some of the Tencent shareholders also sold their Tencent shares and invested in Sea Limited because Sea Limited is similar to Tencent with the gaming and e-wallet services. In fact, you can say that Sea Limited is the Tencent of Southeast Asia plus Taobao. At his prime, Sea Limited was 1/3 of Tencent's market cap. To me, it's not so difficult to explain the downfall of Sea Limited. It was a beneficiary of the COVID-19 pandemic, so it's natural that after the pandemic, it's no longer the darling of investors. So the question now is, should you still love Sea Limited post-pandemic? I will share with you more about the investment thesis later. And one thing you might notice is that Tencent also owns about 20% of Sea Limited, and it is the largest shareholder of Sea Limited. Lately, Tencent distributed most of the stake in JD.com and Meituan. So a lot of investors are guessing, will Sea Limited be the next one to be distributed? I reckon it's unlikely. I believe that Tencent has been reducing its holding in some of the portfolio companies in China, partly to appease China regulators and partly to book the hefty profits on those investments. Personally, I think that after the Meituan divestment, Pinduoduo, Kuaishou, or Neo could be the next one to be sold off. My thinking is that the Chinese government may not feel so comfortable with Tencent investing in these Chinese companies, but Sea Limited may not be sold off, may not be distributed so quickly as these other companies itself, because Sea Limited is not so closely related to China, because Sea Limited operates mainly in Southeast Asia and the business is less dependent on the Chinese market. Therefore, it may not be seen as a significant risk by the Chinese regulator. All in all, you can think of Sea Limited as one of the subsidiary of Tencent, that Sea Limited is helping Tencent to gain exposure to the Southeast Asia market itself. And Tencent wants Sea Limited to succeed in the e-commerce, which is Shopee itself, because Tencent wants Shopee to beat Alibaba's Lazada in the Southeast Asia region. And based on Bloomberg consensus, 29 analysts recommend buy, 10 recommend hold, and 1 recommend sell on Sea Limited. Last night, the closing price was $73.47. The 12 months target price is 96.58, which is an upside potential of 31.5%. And let's talk about the most promising segment of Sea Limited, the e-commerce segment, also known as Shopee. It is contributing to 61% of the total revenue in Sea Limited. Shopee is basically one of the fastest growing online market spaces, places in the region itself. And Shopee generated revenue through a marketplace model. Basically, sellers on the platform pay Shopee based on the pay advertisement services, transaction-based fees, logistic services, and other value-added services. Moreover, Shopee generates revenue by selling products directly to the consumer, like you, which Sea Limited sources from manufacturer or third-party supplier in bulk quantities. And it is the largest online marketplaces in Southeast Asia. It has 342 million visits per month in Southeast Asia. And the second place is Tokopedia. In many Southeast Asian countries, Shopee has the highest market share based on the number of e-commerce website visits. For instance, in Singapore, Shopee had a 40% market share, followed by Lazada at 23% and Amazon at 13% market share. And the most promising market is Indonesia. Indonesia basically has the highest GMV, gross merchandise value, in the Southeast Asia, with a total GMV of 53 billion itself. In Indonesia, the e-commerce platform Tokopedia, which is backed by SoftBank, is ranked as the #1 platform in terms of market share at 39%, followed by Shopee at 34%. And Indonesia is the only country where Shopee is not ranked number one. The e-commerce GMV is expected to grow at a CAGR of 17% from 2022 to 2025, with GMV reaching 211 billion by 2025 itself. So the growth rate is still quite fast. Even though the digital adoption rates for e-commerce is relatively high at 94% in Southeast Asia, is not representative of a slowing e-commerce industry in the future. This is because the quality of user in Southeast Asia is quite good. If you were to look at the picture here, the adoption rate is mainly driven by affluent user who has high spending power and young digital natives whose buying power may increase with their income going forward. Hence, their level of e-commerce spending will rise in the future. And we want to look at the e-commerce number. The revenue was about 263 million in Q1 2020. It increased by 8 times to 2.1 billion in the latest quarter. And this is the growth that you saw in the early days of China e-commerce. And now you can find it in Shopee itself. However, the year-on-year revenue growth has slowed down to 31% in the fourth quarter 2022. The operating income has turned positive in the latest quarter, reaching 109 million itself. And this is mainly due to an improvement in the profit margin. We could see that the profit margin increased from 22% in the first quarter of 2022 to 39% in the latest quarter itself. One of the worrying thing about C Limited is that the gross order appears to reach a peak of 1.8, 1.9 to 2 billion itself. GMV also appear to stay quite stagnant between 18 billion to 19 billion. However, the positive thing is that the take rate here has been on an upward trend to reach 11.7%. So what is take rate exactly, you may ask? The take rate is basically the cut that the platform takes from each transaction that happens on the platform itself. So in comparison, if you were to look at Mercado Libre, which operates in the mature market like Latin America, has a take rate of 17%. So this implies to you that the take rate for Shopee at 11.7% still have massive room for expansion. And interestingly, the GMV per order has also expanded from basically $9.16 in the first quarter last year to 10.59 in the last quarter last year, showing you that the customers are spending their money on more premium items on Shopee itself. And now let's talk about the second largest business segment, Garena. I will spend more time on this. C Limited is Garena first, then C Limited, because the gaming revenue used to account for 100% of its revenue in the past. But now gaming revenue only contribute to about 27% of the total revenue. And in terms of Southeast Asia's gaming growth, it dipped 6% in 2022, but it was expected to grow at a CAGR rate of 19% between 2022 to 2025, indicating that the gaming industry is still growing at a fast pace itself. And you may know Garena as a gaming distributor for mobile games such as League of Legends, Heroes of New Earth, FIFA Online 3 in various countries across Southeast Asia and Taiwan. In 2017, the company also released its own developed game called Free Fire, which had over 187 million daily active users globally as of today. And on top of that, Garena is also an e-sport organizer. In the past, it hosted League of Legends competitions, but nowadays I only see that it hosts its own game, Free Fire e-sport tournament itself. So suffice to say, its own game, Free Fire, is the cash cow for Garena, but Free Fire is also like an one-hit wonder. Other than Free Fire, I don't see Garena actually develop other games. It is mainly known for distributing some famous games like LOL. And unfortunately, in 2021 February, India decided to ban Free Fire, that the app itself is removed from Apple App Store and Google's Play Store, along with other 53 Chinese apps due to the security issues and privacy concerns itself. So the main question here is, will India lift the ban? I think it's unlikely, given that PUBG and TikTok were both banned a few months earlier than Free Fire, and these two apps remain banned in India until today. So you may ask, is there a workaround? PUBG actually returned to India with an India-specific version and was playable for about a year, and then it was banned again in India by India government. So I'm not so hopeful that Free Fire will be available in India soon. To make things worse, Riot Games, which is owned by Tencent, is taking back the popular game title League of Legends and Teamfight Tactics this year as well. So Garena can no longer publish the LOL game in Southeast Asia. So why Tencent is taking back its game and publishing themselves in the Southeast Asia? I can only think of two reasons. Firstly, India has banned many games that are associated with China. However, Free Fire should not be considered as an Chinese game, and to reduce C Limited's association with Chinese entity, Tencent may be pulling their games to decrease their involvement, thereby helping C Limited to republish Free Fire in India in a very hopeful scenario. Secondly, Tencent owns 100% of the Riot game, but only owns 20% of C Limited. And since Tencent took back the game and published in the Southeast Asian themselves, it should really help Tencent book a higher profit and to help Tencent with their shrinking gaming revenue itself. So this could be some of the reason why Tencent is taking back their game. And we also want to look at some accounting numbers. C Limited called the entire Garena business as digital entertainment. The Garena segment was growing rapidly and reached its peak in the fourth quarter of 2021 at 1.4 billion, but it actually fell 32% to 949 million in the fourth quarter 2022. So why there was a drop? I think partially it is because India banned Free Fire in February 2022. And if we were to look at the revenue growth itself, it was doing triple-digit growth in 2021. And these were some of the percentage growth that you only see in the early days in the China gaming industry. And this impressive growth was what excited investors about the company itself. But now the revenue growth was negative 32% in the latest quarter last year. The operating income also shrunk by half, from 858 million to 400 million. And the operating margin also reduced from 61% in quarter 4 2021 to only 42% in the latest quarter. So to understand the digital entertainment segment, it's also important for you to understand bookings. So bookings is basically get revenue plus the plus the change in defer revenue. And it is the approximation cash spent by user in the platform itself. So I believe this all sound quite complicated to you. Basically, bookings is the money that Garena customer already spent. It is the realized revenue. It's booked under get revenue plus the top up amount, the reload amount that is sitting at the Garena wallet that the gamer will use it in the future to buy the virtual products itself in the game. So we could see that it's coming down quickly from 1.2 billion in third quarter 2021 to 543 million in the fourth quarter 2022, which is a decline of 50% over the course of 5 quarters. It is a serious concern because it basically tells you that less people are spending on Garena. I would say that the drop in bookings was due to fewer gamers in the Garena platform as the economy reopens and people decided to spend more time outdoor, at school, or in the office itself. And I also want to do a deep dive into the bookings number as well. Let's compare it with the digital entertainment revenue. You could see that since 2019, the bookings number was always higher than the revenue. Meaning to say there are a lot of gamers topping up money but will spend it later. But all this changed in the final quarter of 2021 that booking itself dropping for the first time quarter on quarter, and it was lower than the revenue for the first time. And if you take revenue minus the booking, there is a deficit of 333 million in this quarter itself. So it basically tells you that gamers are not topping up their money in the platform anymore, and hence the bookings drop. And hence you could say that almost in certainty that the revenue will drop more in the following quarters. And very quickly, you could also see that the quarterly active user also declined from 725 million in second quarter 2021 to 485 million in the latest quarter. The number of paying users also reduced by half during the same period itself, falling to about 43 million. This reduction also caused the paying ratio to decline from 12.78% to 9%. In other words, only 9% of Garena users are willing to pay for virtual products while playing the games. Moreover, each paying user is only willing to spend an average of $12.44, which is a significant drop from $19 back in 2019 itself. So overall, the Garena business is shrinking by a lot. So why is that so, you may ask? I would say that Free Fire ban in India is hurting Garena a lot. And Free Fire is also heading towards the end of the life cycle. I may not be an avid gamer like you, but my guess is, in general, the lifespan for mobile game would be 3 to 5 years time. And having said that, Free Fire was released in December 2017, and this is a 6-year on the shelf. So I don't think you should really expect too much from the Free Fire game itself. And again, Free Fire is basically a shadow of PUBG. The cash cow Free Fire is really drying up. Garena really needs to up its game by either distributing more games or developing and publishing its own game moving forward. And next, let's talk about C Limited digital financial services arm, C Money. C Money provides mobile wallet services, payment processing, and other financial services to individuals and businesses. These services are offered under C Money's various brands, including AirPay, Shopee Pay, SPay Later, and other local brands depending on the countries. C Money is now one of the leading digital financial services provider in some of the C Limited's operating countries, and it has obtained some bank licenses as well. For example, C Limited acquired BKE in Indonesia back in early 2021 and has rebranded it as C Bank. And C Limited also obtained the Singapore Digital Bank licenses in 2020 and recently launched the digital bank Mari Bank to selected individuals. In April last year, it also obtained the digital bank license in Malaysia. But I would say that C Money is mainly used by consumers and merchants to transact in Garena and Shopee at the moment. C Money is now contributing to about 10% of the revenue in 2022, and it is still quite fast growing. Oftentimes, it provides triple-digit year-on-year growth, revenue growth. And this quarter, it turned profitable for the first time with 61 million in operating income. Looking at how the growth rate is year-on-year or quarter-on-quarter, I believe that this segment will continue to surprise all of us. And here is to show you that the payment industry is expected to grow at a CAGR of 13% in Southeast Asia. To put it simply, if the industry is growing at 13%, but C Limited is able to grow far more than that, which it normally grow more than triple digit, more than 100%, it means that C Limited is grabbing market share from other players itself. And lastly, let's look at the past performance and the risk metrics. Here show you the yearly performance of C Limited, Mercado Libre, Coupang, Amazon, Alibaba, Tencent, and Nasdaq 100. And these are the annualized returns. A few key takeaways here. Firstly, let's talk about performance. Since C Limited was listed in end 2017, they have some good years where C Limited returned 255% and 395% in 2019 and 2020. But the bad year was pretty bad. For example, in 2022, it returned negative 76%, worse than all other stocks here. But 2023 year-to-date return was quite good at 44% so far. Secondly, in terms of 5-year annualized performance, it is 48%. Basically, is blowing the competition away. But from the maximum drawdown and the standard deviation, you could see that C Limited is highly volatile. The maximum drawdown for C Limited is negative 89% and volatility is 68. In comparison, the maximum drawdown for Nasdaq is only 37% and the volatility is 26. So all in all, C Limited is not for those typical conservative investor out there. I would like to think of C Limited as a stock that help you to gain exposure to Southeast Asia, to help you capture some of the Southeast Asia growth. And C Limited has been doing a good job so far. I cannot think of another stock that is able to do a better job than C Limited. Maybe Grab is doing a great job. But if you were to look at Grab earnings result, it often miss the market expectation. So if you really want some Southeast Asia growth, your best choice here is still C Limited. It's one of the best small mid-cap stock out there. Like if you compare it with Mercado Libre, Coupang, Zoom, and Robots, C Limited is one of the better choices. In a pure equity portfolio, I would say that maybe 3 to 4% exposure in C Limited is good enough. All in all, it's not the best gaming stocks. The best gaming stock is Tencent, and it's probably not the best e-wallet stock globally. But it is the best e-commerce stock in Southeast Asia. So if you want some Southeast Asia e-commerce growth, your best choice is C Limited. And lastly, this webinar replay will be uploaded on our YouTube channel, Talk Stock with James, and also subscribe to our YouTube channel as well. And that's all for my proper presentations. And let's move on to the Q&A sessions. So if you have any questions, you are welcome to type it out in the Q&A box, and I'll try to answer it one by one. Okay. Okay. Is AT&T a good dividend stocks? So if you have noticed, AT&T cuts its dividend into half last year, but still the dividend yield at the moment, I would say, is probably more than 6%. It is still one of the highest dividend paying stocks in US. Is the dividend payout sustainable? I would say it's questionable, considering the free cash flow is only 1 billion. But the latest earnings report market expectation was 3 or 3.5 billion. So it largely underperformed. So to answer your question, is AT&T a good dividend stock? Maybe not so. I would say that it always lacks the growth opportunities. The growth rate is almost like a utility stocks at the moment. Okay. Okay, I remember you talked about Netflix before. Do you have any updated view on Netflix? Okay, first of all, thank you for remembering that. I think I talked about Netflix on some Q&A before. Previously, I don't quite like it because I think that it probably is hitting the ceiling of total addressable market soon in terms of subscribers growth. But surprisingly, if you were to look at the subscriber number today, it has gone up to 230 something million in the latest earnings compared to about 220 million 1 year ago. So I guess the main thing I would look at would be the subscriber number. Since the subscriber number is growing, the share price could still go up. Another important thing is Netflix also said before the advertising business will contribute to 10% of the total revenue in the future. I believe it's possible. So you can also look at the advertising revenue that may surprise you and me in the future. However, do I like Netflix now that I think that it's now a good time to buy? For that, I'm not quite sure. I would say that probably I'm neutral at the moment. I am interested to talk more about Netflix, probably in the next webinar. But as of now, I am neutral. Okay, I see a lot of questions coming in. Okay, Tesla, one of the favorite topic. Is now a good time to buy? I think that the better entry price is 146 or $120. But considering I often get the market timing wrong for Tesla, that Tesla share price movement always surprises me. I would say now, if I remember correctly, last night was $153. It's not a bad entry price if you really are a long-term buy and hold investor yourself. And I have said this many times, Tesla is a good company. If you are a short-term investor, try not to short sell Tesla and buy back later. I see many traders got burned on the short trades itself. Okay, what is your topic for the next webinar? I basically have not decided yet. Maybe Netflix, maybe Texas Roadhouse. Maybe I will look at some of the companies that will release earnings soon, and try to talk about them, or I will choose one that just happened to release earnings this week and talk about that. But I will try to decide in early next week. Okay, will there be a sell in May and go away, or should I sell my US stocks? Okay, I reckon that based on seasonalities, May is typically a bad month. So if you believe in seasonality, you may like to sell in May. That US stocks itself will usually face a correction in May. But should you really sell first in anticipation of buying back later? I reckon you should only do that if you are really good at the market timing. Otherwise, right, maybe a better trading idea is to wait for the stocks prices to come down, then try to accumulate some. Okay, any outlook on Singapore REITs? Okay, I would say that probably there is nothing much to talk about Singapore REITs. I've covered it in one of the previous seminar. And to sum it up for you, I continue to see that there is not much capital upside for REITs in shorter term, but investors should only own it because of the defensive play, because of the stable dividend yield itself. Okay, I still see a lot of questions coming in, but we have run out of time. So I will answer them in the comment section of the YouTube video once I uploaded the video itself. And again, thank you all for joining us tonight. Please subscribe to our YouTube channel, Talk Stock with James. And I will see you in 2 weeks' time. Thank you so much.